here right now, and you'll know why, because my two co-panelists are incredible. They're just amazing, and let me introduce them. So Phil is co-founder of Shapers, a 75 million venture capital firm investing in fintech startups across Europe. And previously, he was the first employee at Head Sophia, and he invested in over 50 companies and was board of directors of companies like Conto, N26, Scalable Capital, and many more. So now Shapers invest mostly at seed and Series A. The average check is between $500K to $5 million, and B2B and B2C focused. And Joe is chief evangelist at Bank, but before that, he was CEO and board member, and that's only one chapter of his adventure. He also was founder of 5 companies with 2 exits. He previously he was managing billions of dollars at Microsoft, and also was operating an early-stage investment fund focused on sustainability. So, pretty versatile experience. And Bank is a neobank, the second largest neobank of Europe from the Netherlands, now making the first steps into the North America. And today, we're going to talk about the tech shift in fintech and about real life, so about you and I. And what I had to do, I wanted to dig deeper, so I registered at Bank. I became a customer of Bank to have hands-on experience. Unfortunately, on such a short notice, I couldn't become an LP at Shapers, but what a shame.
Fund.
But that's the next stage, right? The next step. So, we are going to talk today a lot about how customer experience is evolving, how fintech is evolving, and what these people with years of experience have to say about the future of fintech in Europe and worldwide. So, our first question, what has changed most in user expectations? Joe, can you please comment on how people are still looking for cheaper backing or for something much deeper?
Okay. I think the way to frame this is, in the banking industry, I guess there was a time when we all wanted to go online, and then we wanted it to go digital, then we wanted it to be mobile. And for the most part, all of us, were dragging banks in that direction. Like, they were always kind of doing it because they had to, rather than because they wanted to. I think the change in user experience is that now everything is expected to be far more personalized. It's supposed to work the way that you work. And I think the banks, the traditional banks, learned that actually the reason that we are all making decisions about banking is because of the technical features, or the digital features that they have, rather than because it's just a big, trusted, safe in the sky or something like that. So I think it's really important to understand that the user experience is driving a great deal. I think that's the major change, is that our expectations are going up and up and up, and our loyalty to traditional banking players, or even digital players, won't be as permanent because there's more technology availability, things that we like. Maybe you can comment.
So I agree. I think the first generation of sort of like the fintech companies in Europe was about like cheaper and being free, and sort of like this fragmentation of sort of like looking for different types of things that the bank was offering you. It might be FX, it might be savings, it might be investing, and sort of like there were like specific apps to do all of that, and like much cheaper with a better user experience. And I think that now the cheap/free is almost table stakes, and everyone is expecting something more. And I think it's very much about sort of like that, something that works for you, that gets you to your outcome. And I think we're in the early days of that revolution with AI, which is really exciting. Yeah. And so seeing like apps like Bank actually personalize things for the consumer is really, really exciting. I think it's what used to be sort of like science fiction that you see sort of like in the movies. I think now for consumers in the next like 3 to 5 years, you're going to see a lot of like really, really cool things. Yeah. And it's going to be more like money working for you rather than like you having to manage everything. And so I think that's what's the user expectation right now, seeing all of these AI interfaces.
And speaking of AI, and returning to Bank, Joe, so what area would you say is influenced more right now by AI inside of the bank?
So yesterday I had this question, and someone asked me, like, what's the value of AI with Bank? And my answer was, what's the value of the water in the swimming pool, in a sense, right? Like, what does it really mean? For us, it's not like something we added on. Like, we're a Gen AI company from almost the inception of the company. But I think fundamentally, we all have to, and if I can take just a minute on this one, remember, you started this, so I'm going to add on to it, and then you can take it from there. The effect of what we're in the middle of. Like, today, we're all sitting in this room, and I have lights shining in my face, but I don't stop and think, wow, look at the light, it's amazing.
Totally.
It's because it's such, the electrification of the world happened over decades and with billions of dollars and lives and grids. The same thing is happening with AI. And so the value or the role that it plays in Bunk is everything. 97% of every customer service interaction is handled by AI with 90% satisfaction. 84% of those, just to put some stats out, are end-to-end fully autonomous. So that's just on one level. But it also runs through how we code. It runs how we market. It runs through how we go to market. So it is a fundamental way. And I don't know what more banks who don't operate this way, I don't know what they will be as we go into the future, because they certainly won't be able to keep up with that if it's not native.
And maybe just to add to your point, of like I think the word software right now has like a real PR issue because everyone says like, oh, software is dead, AI is the way to go. It's actually, we see AI is like, it's part of sort of like, it's software. It's effective sort of like helping you build better companies, run better companies. And so from the investor standpoint, like, we're only investing in companies that are like obviously using a lot of AI. They don't have to be like AI native in the sense of like frontier labs or big LLMs. Effectively what they have to do is like use AI like they were using software and other tools to actually do something much, much better. And you have two ways of looking at it, either from like the cost perspective. I think you were talking about like customer support where you cut a lot of costs, but also you typically improve actually the customer satisfaction, because unfortunately, whether we want it or not, typically customer satisfaction with AI actually increases rather than decreases. The time to respond also decreases, and so it leads to that compound effect. But on top of that, you would also have like the additional revenue that you can generate by doing more personalized or customized products on top of like what you already have. And so we're always trying to look at what is table stakes today, what is going to be table stakes in 5 years' time. And I fear that, or I'm excited about actually the fact that the big banks, the incumbent banks, are probably like even more at a disadvantage today, because even if this is the first tech shift that they are really afraid of, like all of the boards are talking about this at the big banks, but they're still like, most of them are on-premise. They have a really hard time actually implementing AI within the organization. And so I think like you'll see companies like Bunk actually take off like even much faster than the incumbents can adapt to this.
Can I add one point?
Sure.
So I think to extend that is, we talk about the upside and the personalization, but we also have the entire part of battling the dark side of the industry, right? So there's every tool that we have available, the fraudsters have available as well. So I wonder if the definition of safety and security isn't the best tech at some point, because you're in this arms race or war against the dark forces that are basically out there trying to like defraud people and take their money, and that's what we have to be better than those. And that if you're not that technical, you're not on the front end of that technology, you don't have a chance. And that's the other part that runs parallel to all the wonderful things we can do.
Totally. I think in this industry, trust is one of the most important modes, and it compounds. And I think like it takes decades to build trust, or years, and it takes like a few hacks or something like that to just like lose all the trust. And so that's a really important point.
So speaking of customer support, I didn't have chance to check it out because I didn't have any problems yet. So far, so good. So I have a question for you, Phil, talking about AI-first companies. And I bet a lot of startups include AI in their pitches. But can you please tell us a few words about whether you distinguish companies that are really AI first, or those who just put that label, that brand? So what's the real difference, the threshold there?
Yeah, look, at Shapers, we invest in early stage companies, so typically like around seed or so. And I think those are all companies that have been born, or almost all of them, after 2023, like the first ChatGPT moment of November 22. And so from then onwards, I think it's fair to assume that anyone that is sort of like very serious about what they're doing, and like they understand that the cost of their opportunity cost, meaning like the time they're dedicating to it, is the most important thing, and so they have to be sort of like AI from day one. Now again, they're not an LLM, but they need to be using AI sort of like in their day-to-day. So I would almost assume that's like table stakes, and some companies will be much better, some will be less good, and so we need to find those that are better. But then beyond that, what is really valuable is like trying to understand like how you're using it to get like real moats, because the AI is in today's world is like the big models that you're renting from like your call it landlords. Like there's only a few landlords in the world. Just like in the prior generation, there was only a few sort of like cloud companies, or a few companies where you could do online advertising, like the Facebooks and the Googles. And so I think this is exactly the same thing. And so then you have to differentiate with sort of like proprietary data, workflows, trust, regulation. I think you're making an interesting point there as well. And so for me, it's really about like, are they taking it very serious, and do they have like a broader opportunity, or are they just like an AI company, in which case like there's not really much meat to it?
This is AI washing, I guess.
Yeah.
But there's also the difference of, you started this, it's like there's the lab, frontier AI, and then there's the factory, right? So there's companies that are experimenting and they're token maxing and they're trying to, and they're teaching us things that we don't want to know, we want to know and don't want to know. Then there's also companies like ours, and I guess the ones you're looking at, that are basically running a business with it. We're in the factory, we're delivering every day, and it has to deliver on that behalf. For us, the cost savings is sort of interesting, but I think the ability that it gives us to scale and to grow and to run 24/7 is a bit more interesting than like what we might be saving in terms of costs when it comes to that. So the power to grow is I think the upper or the better piece of that.
And the discourse now is mostly like, again, on the background, we saw the Anthropic round, and we're all pretty scared here in Europe. Like, what are we going to do with all those like US-led companies, and how do you feel European fintech can go global, especially like taking into account the news about banks filing to get banking license of Mexico and the US, and in general, fintech is pretty segmented, and every single new regulated market is pretty hard to conquer. So what would you say European companies need to do in order to be successful in Latin America, in the US, in Southeastern Asia, or like worldwide?
So I've had you did my introduction, which took a while, which is more of a statement of how old I am, I think. But I've also had the chance to live around the world, so I've lived on the planet. And the regulatory environments are difficult and they're different. The cultural environments are quite different. But ultimately, any of these companies, and you can define this how you like, we have to show up in moments that matter for a user or a customer, however they want to define it. So for us, we look at what are those moments that matter. Like, is it 4 a.m. and you're traveling another country and something went wrong on a payment on their end, and somebody has to be there to help you? That is who Bunk is and how it has to operate. So that type of thinking, that type of underlying technology, so you're running 24/7, 38 languages, you can even just speech to speech in your own language, because we did that as well. That's going to be the exportable capability. There is a technology stack, and there's a culture in the company, and there's a value to a user that's going to be somewhat similar. Now, there will be variations on that theme in the different places you go, and there's also licenses to be required, because we're in a regulated industry. But I think those moments that matter are going to be the reason. That might be different if you're in an enterprise sales company, but there will still be moments. Yeah. So that's how a European company exports itself into other markets, is they know what those moments are, they know the technology that solves a problem, and they ultimately have the understanding and the cultural ability to try it in a new place.
Yeah, the slight counterpoint that I would make is like it's so hard. That's the reality. It's incredibly hard.
And expensive.
And expensive as well. I was on the board of a few companies that actually like tried to do that, go to the US, etc. Some successfully, some very unsuccessful, and then they retrenched back to Europe, including N26, for example. Yeah. And I think I can count like on one or two hands, maybe sort of like the successful fintech companies, European companies that are already like big abroad, outside of Europe, the Adyen's, the Revoluts, the Klarnas, etc. And then obviously there's going to be a new generation now, which is really exciting. I think AI unleashed like a new mentality in Europe where like you believe that you can go and build anywhere, which is really, really exciting. You see like European entrepreneurs a lot more global, a lot more ambitious. In fintech, it is harder. Even sort of like just across Europe, it's also hard because yes, you have like a supposedly sort of like a unified market with sort of like passporting, licenses, etc., which actually works pretty well. Yeah. But then you have like different languages, different cultures, different payment rails, and different customer services, etc. And I think some of it is now being addressed a bit more by AI, which is really cool. Some of it will continue to stay as like a local specificity of the market, and then you have to adapt to it. And so I think it's why it's very handy to, for example, start in like a larger market like the Netherlands or France or Germany, as opposed to starting, for example, in Portugal, where I am from, in fintech, because the local market is quite small to then scale from. And so, yes, I love the positivity. I think it's like still incredibly hard, but there's more companies doing it, which I'm very excited about.
So I've expanded companies from the US into other countries and then once back into the US. The latter was harder. I think the difference, my great lesson on doing that, it's not a bunk comment really, was the more narrow that I focus, the better the probabilities of success. So the more that we focused in terms of like the definition of the customer, the problem we were trying to solve, those were a better strategy going into some place like the US, which is just, you know, it's so noisy. Mm-hmm. It's so noisy and it's very expensive, and you start to think about cities like they're countries. Mm-hmm. So if the European tech wants to export, maybe on top of what Phil said, I would give the advice of how do you narrow your focus so that, and also set your expectations on the timeline. Because even Adyen, I think, took 6 years to be successful before they felt like it was actually going the way they wanted. So it takes some time. US is different than other markets.
US is fragmented as well. I mean, launching in Miami is completely different to launching in, I don't know, maybe LA. So.
But the one thing that I think why people see it as sort of a golden market in a way is that it is generally the same legal construct and the same language in a 350 million population. Yeah. In places like regulated industries like ours, you can sort of get a national license. You just have to kind of check every state. That is, you know, probably, and you learned that. But there's like some blanket things that you can do. So it feels like you could go. The problem is that no one knows you, and it's super noisy, and for everything you want to say, it's 10 times the price to get heard. Exactly. So unless you know that going in, you're really at a disadvantage.
And by the way, I feel like right now is the moment to go to the US from Europe. Sort of like this administration is probably like the more pro-business in terms of like banking that you ever had. And so that's why I think there's so many European companies actually now getting licenses in the US. It's a once-in-a-lifetime opportunity. I fear that potentially with the next administration, you might not be able to actually get those licenses again. And so it feels like the right moment to go and get it.
That's actually interesting because, again, you need huge marketing budgets, right, to get visible. Again, like infusion of capital in the US, and you need to get that capital. And Europe is not that keen on investing big amounts of money. So again, you need to take probably the US venture money and then spend it in the US, inside the US, to get visibility and to get traction.
I mean, divide consumer and B2B and enterprise sales, and you can change the budgets pretty quickly, I think.
Yeah. And I would also say sort of like that, indeed, there's not a lot of growth capital in Europe. There's maybe a handful of like, or two handful of like VCs that have deep pockets enough like in Europe to do growth capital. But the reality is like any company past like a Series B or Series C in Europe, like if they are good, they're like all like lined up for the US investors. And so I wouldn't say, I think like the capital excuse, it's a shame that it's not European capital that is recycled into the European ecosystem, but like the lack of capital in Europe, I think is a bit more of an excuse than actual reality at the growth stage.
It's certainly on the company side, that can't be the excuse.
Yeah.
We can complain about the investment all we want or the investor ecosystem, but like companies have opportunities.
Exactly.
Yeah.
Exactly.
He's right.
Fair. By the way, talking about founders, I have a question for you. So, what matters more at the early stage today? Product innovation, distribution, or I mean, in terms of founders, if we have any founders here with us, should the founders be focused on like regulation or distribution or tech itself? So, in order for you to pay attention to the company feel, and you, Joe, as an operator, what would you suggest to prioritize for early stage founders in fintech?
Wow, that's a big question.
Yes.
I mean, I'm going to probably sound repetitive in a sense that this is probably just kind of a personal belief system in this, which is, you have to have a real clear understanding of a problem. You have to have a real great understanding of technology, and you have to put those things together. So I would get very focused on what that is. What was the famous quote? I don't want to invent anything, something people don't want to buy. Like that's a Thomas Edison quote. Like it's like you need to be very focused on what that transactional situation is and where there is some value. So that's a founder focus. Like as a founder, like whatever your dreams are, whatever big things are, whatever experiment you want to make, get down to the base level. Who? What for, why, how often, solve those problems, and then you can go. Regulatory and raising money and things like that, that's to me always comes after.
And like, timing as well. Timing
is wonderful if you get it right, but like if you think that you can plan all these things, you're fooling yourself. Like what you have to do is sort of say, I believe in this enough, and I want this enough, that I'm going to go do it. And then I'm going to get focused on some problem in some audience that's all the very earliest building elements. And then you just have to have the backbone to like eat concrete or something in order to make it through those steps. Then you may find your way, but that's the reality.
So you build product,
Product first for me.
Product first, and make it as narrow as possible, right? Then innovation like tech is pretty accessible now with all the AI tools, and you can save on maybe building that product, right?
I don't think that's true.
No?
I think that, the idea, look, we have to, again, lab and factory, there's a separation of like, there's a lot of AI and there's a lot of beautiful things and you can go and ask it to code for you or whatever, but like, unless you're really technical, I don't trust anyone in using AI who's not technical because you don't really understand what's going on and you can build something that doesn't make any sense at some point.
Okay, well,
so
you need to...
I don't think you're going to vibe code your way into a unicorn, really. I don't believe it.
Yeah, so I agree mostly with everything Joe said, but the one thing that I would say is that typically I always see like founders like over-indexing a little bit more on product. So it's like it's a very natural sort of like choice. Like as an investor, sort of like I maybe over-index a little bit more on distribution, especially sort of like if we believe that in the next few years, sort of like there's going to be a lot more people being able to build things. And I agree with your point that you're not going to vibe code sort of like a unicorn, but I do think that you're going to be able to do a lot more with less people. And so I think the regulatory moats is real, but it's sort of like it's temporary. Typically, for any good company that attracts like the right set of people and capital, you're going to get those licenses anyway. So that I would probably put like almost last, even if it's a super important thing. I do think that distribution in a B2C world, and I'm now separating B2B and B2C, but like is the most important thing. And actually, even on B2B, I think the reason why we're all like getting a bit fed up in our LinkedIn feeds of all of these B2B founders and salespeople, et cetera, shouting so loud about their companies and all of the different milestones is because we're in an attention-grabbing economy. Yeah. It's like you always want the headlines. There's this impression of sort of like king-making in VC, which is sort of like you give so much money to a certain company that basically no one will fund your competitors. And this has been around for many years. Obviously, SoftBank was a great, was one of the first investors to do this, but you now see it like very often, and so that's why you see all these headlines on LinkedIn. For me, I would say first distribution and then products. But I think that's like the investor. And
it's a good difference of opinion because I definitely would say if I had to go first, second, I would first understand who, like the user that's going to be there, build a product that makes sense to that user, and understand that there's a distribution mechanism that can couple with that. That would be my order of operations. You might invert the last two, but I would say I go back to Bunk, and that's focus on a certain type of user, digital nomads, internationally minded people who live in more than one country. That's the only audience, and it's all about that audience and what their uses are and the technical solutions that make their life easier. And I think it's the reason that we built and we bootstrapped and we're profitable now for the third year in a row and we continue to grow and expand on our own money, I think that's part of the reason that that exists for us. Proof and point in the case.
Yeah. As an investor, I've seen so many beautiful, incredible products go undiscovered.
The Betamax.
Yeah.
So maybe to sum up, we need two people, one marketer and one builder, like CDO.
Yes.
So the one should build something really solid, and the second one should be responsible for distribution.
And I think the marketer is probably someone who really understands AI and algorithms and how to game Google, even more so than they do, the basic.
Totally. And I think it should actually be one of the founders. One of the founders needs to be amazing at distribution, not a marketer, but like amazing at
the
distribution.
technical side of what that is now, because it is behind the scenes technology understanding of distribution, not just like, can I write a good catchphrase, right? That's not the game anymore.
Totally.
By the way, talking about the future, what are you, and that's probably the last question, what are you guys excited about in fintech the most? So what we are going to witness in the next couple of years?
You want to go first?
Happy to. So very briefly, again, taking the consumer lens for real life, like I think a very easy example that we can all imagine is that, and we're actively investing in the thesis, like in wealth management, and believing that like in the next 3 to 5 years or so, we're all going to have like a private banker in our pockets, and that is not only like the traditional sense of the private banker that we'll think about, that you can chat to it, etc. You don't have to call, you can just chat, but actually like money working for you. So like this idea that you're gonna have like, it's like, think about like the first generation of robo-advisors that was extremely simplistic, but that was actually moving money for you. You gave them a mandate, let's say 10,000 euros, and they would like invest for you here and there and etc. within the guardrails that you told them about like your risk appetite. Now I think you're going to see that like into a lot more asset classes, into like any amounts of capital, not like the big amounts.
I see it as a slippery slope, but
so I'm gonna compliment that because I think he's correct, and I'm gonna maybe extend a bit. So I would just put it in like, if 5 years from now you have a bank and it is not somehow proactively managing your financial life, there's something that's gone really wrong. I mean, that's a bank that's not going to make it. And I think proactivity goes in like 2 or 3 different layers. I think wealth management is one area of that. I think your safety and your security. Like we have a feature already called Safety Shield that if you make something that's out of your patterns, like really out of your patterns, we'll actually freeze that one payment for 24 hours and let you have a second chance at it just in case something was wrong. So that's like an example of that, but then there's so many other things that'll happen. So there's going to be a proactivity to what the technology is able to do. It sees you, it understands your patterns, it knows what you're doing, it knows that your kids are getting older, it knows that you go on holiday about the same time every year. Why not? So proactivity is one of the most exciting things that I think that is coming in the world of fintechs, and I think those that aren't geared into that, and I think if you're not AI native, it's very, very difficult to do.
Yeah.
I like the idea that bank offers me to do savings right now, so probably it knows something about
And
me.
there's a good rate, too.
That's right. So thank you very much, guys.
Thank you.
Thank you for listening, for being with us. If you have any other questions, I think you can ask those questions afterwards. So you are open to getting to know people, right? So thank you.